So now we discuss the concept of takaful. Takaful basically is an Arabic word which means kafala. It comes from the Arabic word kafala, which means to guarantee. So takaful means mutual indemnification or mutual guarantee. And the concept of takaful was established by the Sahaba radiallahu anhum, based on the Medina Charter. So in the Medina Charter, you have the concept of mutual solidarity and mutual indemnification. So this mutual solidarity, mutual indemnification is also an established principle in Sharia. And therefore, it has reasoning from a Shari'i perspective. So you also have the concept in fiqh of the haqila, or the blood money. So blood money is provided by an entire tribe, for example, as fidya if one person killed another person from another tribe. So this concept of aqila and the blood money is also, accepted in Sharia. So it means that basically takaful refers to where people or policy holders pool their funds together, and then their funds are then used to indemnify each other under a takaful scheme. So this is what is referred to as a takaful or mutual indemnification policy. The concept of takaful has gained widespread acceptance. However, much more is required in terms of developing the takaful mechanism. Takaful mechanism basically is either premised on the concept of a waqf, where there is premium donations or premiums that are paid over to a waqf pool, or it could be on a hybrid basis with a mudaraba structure. So takaful is different from conventional insurance. Conventional insurance is impermissible for three reasons. The first is due to the reason of riba and interest. Why? Because if you paid a premium of, let's say, X and you receive Y, that is a concept of riba. Or it could also be impermissible on the basis of gharar, future uncertainty. There's uncertainty because if you pay the particular premium now for something to be delivered at a future date, it could be that you could get a payout or not, for example. So that is an element of gharar. Now, there is a difference between the word gharar and khatar. Khatar refers to an uncertainty that could happen or not. So it is a major uncertainty. And gharar refers to, yes, there is an uncertainty that could happen, but the occurrence of that uncertainty is unknown. It is majhul. So this is gharar and khatar. And lastly is the concept now of gambling or qimar. So gambling in the sense that you pay $100,000 in premium, but you only get the benefit of $10,000. So conventional insurance is impermissible for these three reasons. Now, takaful is premised on the basis of mutual solidarity, mutual indemnification, similar to like a mutual co-op, but the underlying structure is based on a waqf, or as I said, based on a hybrid waqf plus mudaraba structure, or a wakala investment structure, and the investment is based on Sharia compliant assets and stocks, etc. So this is a diagram of a takaful company. As you can see, the takaful, there is contributions into the waqf pool, and then there is another, subsidiary structure that is referred to as the investment fund or the pool. So this is referred to as the takaful company. Then you have conventional insurance, where the capital and expenses are invested into a structure, and it is referred to as premiums. So you can notice the difference in a takaful company is that it is referred to as contributions, right? Or tabarru, or iltizamul tabarru, based on the Maliki principle. And conventional insurance is that it is a premium that is paid over. Now, the main difference between conventional insurance and Islamic indemnification, I refer to takaful as Islamic indemnification, is that in takaful, it is the sharing of risk. It is not a transfer of risk. In conventional insurance, it refers to the transfer of risk. So where risk is transferred from one party to the next, that is referred to as the transfer of risk. So conventional insurance, as I mentioned, is impermissible because it refers to the transfer of risk from one party, from the insured or from the policy holder to the insurance company. Takaful is permitted because it refers to the mutual indemnification of the parties. So this is the concept of takaful.
Islamic finance learning made simple and memorable.